Now, get ready for a panel discussion on how AI can help improve decision making for underwriters by providing them with real-time contextualized data about an applicant's credit profile. Additionally, they will also look into tools that would help prevent fraud by detecting anomalies into credit histories while staying compliant with privacy laws. Please put your hands together for Parag Nadavi, co-founder of Easy Funding Solutions, Jake Mellor, Chief Strategy Officer at OWLFI Strategic Businesses, Thomas Quilty, CEO of BD Consulting and Investigations, Inc., Chintan, Sheth, Chief Financial Officer of Navika Capital Group, LLC. They will share their viewpoints on credit and underwriting, AI, better tools, and fraud prevention. The stage is all yours, moderator.
All right. We have a very impressive team of individuals here that have an amazing experience in different and various careers and industries. But everything that they're going to share today has to do with underwriting, credit rating, credit giving, and AI. That's important because in the world that we live in, everything is becoming more and more electronic, more and more robot or AI driven. And sometimes there's a place for it, and sometimes there's not. So today's discussion will be very interesting. And for us to understand and gather a little bit better the context of where each of these individuals are coming from, I would like them specifically to give a few more words about their background and experience so that we can relate to where this knowledge and information they're going to share is coming from. And I would like to start first and foremost with the hotel industry. Can you kind of give us maybe your full name again?
Good evening, everyone. My name is Chintan Sheth. I currently work for Navika Capital Group, LLC. It's a privately held real estate investment fund which primarily invests in hotels, shopping centers, office buildings, and golf courses.
Now, tell me what a typical day is like for you.
A regular day starts with our making sure our banks are, there are no frauds in our banking transactions. We have to review all our banking transactions on a day-to-day basis. Then meetings with our sales team, our operations team to go over how the operations are the months going as we've planned from day-to-day basis. And then emails and dealing with the accounting team.
And where do you see AI in your industry, and how does that relate to credit rating or credit risk?
AI. Now, what's AI? As everybody knows, artificial intelligence. Now, for example, in my industry, the hotel industry, remember years ago when you guys used to stand in lines for check-in? Now, you can check in on your app. You don't need to stand in lines, waste that time. So straight away you get your room numbers. Now we are investing in mobile keys. You don't even need to go to the front desk for your keys. You have it in your mobile. This is just one example, one or two examples how AI has helped the hotel industry. And now the developments are, for example, you're staying in MGM, you want to go to a restaurant. You don't have to call or go to the restaurant. You can book a table on your app. That's how AI is helping you connecting with the restaurants in the hotel downstairs.
Some people feel that AI will eventually replace every need in every industry. Can you maybe, in the hotel industry, I have a hard time believing that to be true, but help us understand where it fits in your experience and where it does not.
Now, what's hotel? Hotel is hospitality. No matter how much we keep more changing, obviously AI is going to help, but that hospitality is through human connection. It's always going to be there. AI will help the hospitality industry to reduce the mundane jobs, but it will never eliminate all the jobs.
Very good. Now, we're going to move over to Parag. Parag, please tell us your full name, tell us where you work, what your industry, what your background is, and then let's go into the topic a little bit.
Sure. Thank you so much. Good afternoon, everyone. My name is Parag, Nevatia. I own a company called Easy Funding Solutions in New Jersey. Basically, we are a business finance advisory and consulting company. And my background comes from banking. I've been in banking for 20 years at 7 different banks in the New York region, New Jersey market. And basically, Easy Funding Solutions was born after I found a lot of gaps in the financing system, in the financing world. And Easy Funding Solutions basically is an effort now to fill up those gaps. Whether a client needs money, are they prepared? And if they're not prepared, how do we help them to get to that point when they're ready to start? If they need a business plan, we help banks or clients with business plans. If they need a projection analysis for loans or a business model, because what I've seen in 30 years of doing what I'm doing is I've identified the missing factors, the real core, why you're doing what you're doing, how are you going to do what you say you're going to do, and can you scale it effectively with logic, and that's missing. So Easy Funding basically brings all of these to the banking system, helping banks help their clients to get to the finish line.
Okay.
Thank you.
Business lending is incredibly important in our day and age. Facilitating quicker and faster decision-making process. I imagine that AI plays a role there. But help us understand, in your perspective in the banking industry, when AI helps and when AI gets in the way.
Sure. So predominantly, my experience has been on the SBA side or the commercial lending side. Now, there is, as Chintan pointed out, there is room for AI in every sector out there, including financing. Now, AI plays a role in the very preliminary stages of perhaps smaller loan items.
Like Parag said, AI helps things do faster, can go over a lot of data, which is compiled and give you the results. For example, where AI helps the credit and underwriting field is personal credit cards. You can apply for your card right now these days. Online, you can get the results in 15 minutes, whether you are qualified for a card, yes or no. Though earlier, these things were not possible. You had to go to a branch, sit down over there, fill up multiple forms. Then those forms goes to the head office, all those things. So AI is helping the credit industry in this manner where it is easier to get your personal credit card loans, auto loans, and also to make sure the data which is sent through online portals is analyzed for a quick review. And if there are any gaps, then obviously we all know that they refer you to the human person, that okay, we will get back to you.
And if I could just add to that, you also see that platform, the AI platform, on the business funding side as well. You have a lot of B2B lenders where people are applying for these loans online, and it doesn't take 3 weeks or 4 weeks to hear back from banks anymore. The results are given literally in a couple of days, if not hours, if not, days. So it does help.
Talking from the business owner perspective, I mean, I have clients in 27 states and 7 different countries, and sometimes the competitive advantage comes from immediacy of funding. Specifically, if it's inventory financing or work in progress, there's just a number of things that they could do to produce wonderful profits based on timing. And so AI obviously can help play an advantage there, but also in the same sense, only so far or only in such certain directions. And there even comes a point where, from an earlier session today, we learned about how AI can learn behaviors, can learn trends, can even learn incorrectly certain behaviors and trends. And that brings us to Tom, because Tom, sometimes AI is even the culprit in certain fraudulent opportunities. Oh, that's kind of like a bad phrase to put together, right? But can you kind of explain that a little bit more, Tom?
Sure thing.
But also give us your full name and a little bit of your background, and then jump into the topic there.
Thanks, Jake. I'm Tom Quilty. I'm the CEO of BD Consulting and Investigations, Inc. It's a California, Silicon Valley-based corporation with offices in Silicon Valley and Boston. And so generally, if you're seeing me, that's because things have gone wrong. And so, but I am a nice guy, really. But just my experiences, retired military, retired law enforcement, and been helping solve fraud cases and in fraud investigations for more than 40 years. And, you know, to come back to your question, says, you know, there are tools out there that I use. We earlier had people talking about e-discovery and using, that's a really good application for artificial intelligence in sorting through the complex data to find information. Also, I do shipping for the insurance industry, you know, underwriting for them as well. And we look at shipping analysis and cargo and in just huge data sets. But back to your question, what was that question you wanted on that one?
Yeah, so I mean, specifically in certain circumstances, you know, AI is able to learn trends and is able to learn almost behavior based on what we train it. We can accidentally even train it wrong or train it in such a way that it opens itself up to fraudulent opportunities. I use opportunity in the vindictive or villainous way, I guess.
In that regard, it's AI, all the AI right now, unless you have a computer that's writing its own code, and that's still experimental, everything is set on rule-based. Someone has to come up on the rules and train it how to do that. When you have a set of rules, it says, and if you understand those rules, if you're internal, you could actually, you know, if you understand how the thought processes work, you could actually, you know, use it to your advantage and game the system. Likewise, if you're coming in externally, if you understand the system, you can game it or gamify the system. And this is where sometimes I get called in.
Now,
again,
Tom, maybe not everybody out there knows what it means to game the system.
You basically, when you say game a system, you learn how to access it in a manner that someone else made, you know, where it's not intended.
When you know the rules that the AI plays by, you can manipulate it.
Yes, you can manipulate it. And so, big question is, what are you looking for? What is the problem? Is it an internal problem? Is it an external problem? And again, AI is designed by humans, and you're going to have a problem, and it's not applicable, as they're saying earlier, for all situations.
Now, in business today, there's more and more e-commerce, there's more and more digital service. In my industry, where we're helping people raise funds, where we're helping people with high-level tax strategies so that they can save more in taxes, invest more in their business, overall increase their net worth, all these wonderful things. More than ever before, even for our clients or for the funding sources, we're having to do some underwriting. And how does AI play? Maybe help me understand some of the pros here to AI. As right now, the discussion today is to understand where it fits best. And so let's talk about when it works in our favor, and then, of course, talk about some of the pitfalls.
So, as you said, Josh, timing is very important, correct? AI is available 24/7. You feed in the data to them, go to sleep, and you can have your results by the morning you wake up. Anybody wants any help, you don't have to wait for the morning to go to the bank. You can go online on any bank's website, apply for any loans, personal loans, auto loans, or even a pre-approval for a home. Let's say tomorrow morning you are going for to look at a new home to buy, and as you know, everybody requests a pre-approval from the bank. You don't have to wait for that.
So what would normally take 2 to 3 weeks of just human interaction and work and whatever now can happen sometimes overnight.
Overnight. And also, it is a much more reliable. It can go through vast amount of data in a short amount of time and give us the data to review what decision do we want to make as decision makers?
Now with that, in a way, to what Tom was saying, if the consumer is smart enough to know the parameters or the rules by which the AI is working, they can game the system. And so if I am fraudulently applying for credit because I'm presenting the answers I know the machine wants to know, there is where we need the human interaction, the sniff test. The AI doesn't sniff, but if it walks like a duck, quacks like a duck, looks like a duck, even though it fills out the credit application like a person, we need somebody who can do the sniff test, right?
That's correct. But again, the AI would be very helpful, especially in going through the logs and looking at all the different data that's collected as part of that, including where the person may be connecting, the data they're putting in, even depending upon how sophisticated it is, the AI is, how they type, how quickly they type. All of these can tell you patterns. And again, it's dependent upon the programmer to use AI appropriately and decide what is it I'm looking for, what are we trying to achieve, and with the thought that, especially in underwriting, that fraud is the main reason for this, along with speeding it up, but it's to help combat fraud.
You know, and let me explain maybe a reason for that. Somebody trying to get a small business administration loan, an SBA loan, with an IP address from, let's say, Iraq, maybe it should require more thorough review.
So I'd like to add to this. How many of us heard about the EIDL loan, right? Some of the issues that I had as a consulting company when clients called me to apply for EIDL loans was, and I found this later on, that some people they gave information that was asked online, but I was surprised to see that some people got the money when they were not eligible. So now this is a classic example of playing that game, knowing what not to put or what to put, and the result was positive at the end of the day, but then you're left scratching your head saying, what did you input in that field? Now, what was this? Nothing but all the data that was captured, but that was fed in by someone, right? And at that point, that's the fine line between a human being looking and validating the information that's fed in versus something that's just fed in by someone who may be just playing the system.
Yeah, definitely, Parag. I agree with that. I'm not saying that AI is good for every single type of loan, but obviously we need a human eye out over there. But definitely AI is useful for bottom level loans, but not for the complex commercial loans or the transactions, which we need a human eye and a human to go through all the documents and give us the results.
Yes. I've actually seen on more and more of these loan applications, they're asking for social media profiles in an attempt just to validate that they really are going to use the money for what they say they are, and it's not just a front, as well as to validate they're a real person.
Character as well.
Character as well, yes.
That's one of the 5 C's in lending.
Can you go over those 5 C's?
Cash flow, right? Capital, character, collateral, and capacity.
Very good. Now, really fast, we have more we could talk about, but we'd like to give the audience an opportunity to ask a question. Should you want to inquire, we have some amazing individuals here on the panel with vast experience, and would love for somebody here in the audience, should you want to inquire something specific, feel free to come up to the mic and ask the question, or yell it out and I'll repeat it. All right, I was going to repeat that, but now you have a mic. Will you go ahead and repeat that?
What are some of the best data sets that you've seen for AI to use in the purpose of detecting fraud, whether it's personal data, litigation data, other types of sources that you've seen?
I'll start off, and then I'm going to hand it off to Parag on this one, because one of the things, the very first thing is your credit histories. You know, they're looking at you, are you a real person? And before I hand it off, one of the things to consider is right now that we're having an issue with artificial personas, which is, you know, some people call them sock puppets, but the level of sophistication of those and what's possible in 3 or 4 years, it may be almost impossible to determine whether they're a real person or not.
And if I could just add, I mean, look, what are the banks looking for? Is it a live person? If what they say, what they put on an application is just legit, will they be able to pay back the loan, right? So history is important. When it's projections, does the model make sense? So there's so many different aspects that the bank has to take a look at to eventually make that right decision, right? Which is, A, do I give this loan? B, how much? Because we've all heard that banks counter offers as well based on what the cash flow is, the EBITDA is. If you don't have enough cash flow, you don't have the ability to pay back the debt. So it's all these different factors, you know, variables that the banks have to look at to make sure that the information that's being provided is legit.
And so for a successful outcome, or perhaps an increased chance of a successful outcome, we rely on AI, but we rely on people. Now, we can fail on both sides of that. We can train the AI, or people can game the AI. We can train the AI bad habits, or the AI perhaps has a weak spot that can be learned and gamed, as well as people can lie. People can commit error. People can commit fraud. But the balance of the two hopefully provide a check and balance against each other. Now, we had another question out here. We've got a couple questions.
Thank you. Bringing up on that point that AI technology can be used for good and evil, how do we believe that KYC and AML is going to start to evolve with that when we can talk about a federal level? Because of course, internally as financial institutions or banks, we're going to try to avoid fraud at the highest level. But how do we believe that on a federal level this is going to change? Obviously, FinCEN requires specific things, but is it going to be on the responsibility of companies to actually deal with knowing your customer, making sure that no fraud is occurring? Or do you think that on the federal level, things are going to have to move faster to prevent technology on causing more fraud?
You bring up a question that spurs several more questions.
I know it's a complicated question, but more importantly, is it going to be on the responsibility of financial institutions to make sure that KYC is even better than what is already required? Or do we believe that the federal level is going to catch up fast enough with technology?
So I'm going to provide my opinion quickly. First and foremost, AML, anti-money laundering, and then KYC, know your client, just for the audience, right? The burden of proof, or the responsible party, is it going to be private industry? Is it going to be government? And then which government regulatory authority? Is it the SEC? Is it FINRA? Is it anybody else, right? Exactly. Typically, historically, where industry doesn't govern itself well enough, then government steps in. That is the role of government. Sometimes government steps in too far. And sometimes once government steps in, it never pulls back. So should industry step up to kind of govern itself, we rarely see that government says, well, now industry, you're doing well enough, we'll step back. That just doesn't ever happen, right? What we'll find is that where there is an increase in actual problem, meaning that industry is not doing a good enough job at regulating itself, because why expend more money in that general area as long as profits are good, then the government's going to step in. Now, ideally, some of our banks, and particularly the banking industry in general, because they are government regulated but privately held, oftentimes does the best job at that type of control, internal control. And should they allow for additional measures within AI, they're also allowing for additional security, though I want to hear from the panel.
That's one of the arguments, and though I'm not a big supporter of a central bank digital currency, is for exactly that. And for industry or for a private business, let's say a gas station, is it important that they know who their customer is? And again, that's where it comes down to efficiency and business operations.
Any other comments there? I think hit the nail right on the head. At what point does it make sense for these small little teeny tiny transactions? They might be paying with a digital currency. They might be paying with any kinds of other methods of payment. We learned earlier today about people who have assets that are pegged to the gold standard, again, going back to that versus crypto versus, all these other methods of forms of payment with assets, payment with currency, payment with fiat of whatever. And whose job is it to verify that that actually has value? At the end of the day, there's a lot of trust. And in some of these markets, whether it be USDT, the form of payment, or what have you, people are using it today. Maybe not in the vast extremes as they're using other methods, but I would say that our times are changing, and you bring up a very valid point. And the answer is kind of up in the air in the sense of where the winds take us. There's an old song about that, right? We'll see at what level government steps in and at what level we as a people let the government step in, because those could be two different things.
Just to add to that, point of cryptocurrency. These days, everybody is crying that everybody has lost a lot of money in cryptocurrency. For example, the government has been saying that for the longest period of time, this is not a stable currency. Do not invest in it. But still, as investors, people, consumers, we took our chances. We did, and we lost. We can't blame the government over here, or we can't tell them that the government has to supervise us. We are also supposed to be blaming ourselves that we have taken the chance to invest in cryptocurrency. Now, so obviously government will step in only if needed, when it is needed, when they feel. I think now they are coming up with the regulations to regulate cryptocurrency. When will it happen? I don't know.
That's also a very good and valid point. And coming back full circle, at what measure do we need to know our client? And what measure do we need to moderate and restrict not only the possibility of risk, which maybe we shouldn't, right? Because knowing what we're getting into, there is a risk, but also governing the compliance, governing the potential fraud, which I think is the bigger picture of government to actually step in and provide controls. I think right now we're getting ready possibly to wrap up. We did have one more question, and so let's touch on that, and then we're going to have some closing remarks.
Thank you so much. I have a special question. It's regarding the banking industry. In the past years, the technology has become really important, but the compliance officers' teams, they were not really happy about it. But in a way, the financial technologies came into the economy, and they understood that if they are not in the same thinking, they will be behind. So what do you think it will be the future of the banking industry regarding all this AI technology and to prevent fraud itself?
You want to take that, Sheth?
So I guess we're narrowing in on what is the future with the banking industry and AI in regards to anti-fraud.
In regards to anti-fraud, see, no matter what, banking industry will have to work with AI in future years, maybe more than what we are currently working. But they will also at the same time develop internal controls to make sure to reduce the amount of frauds. No matter what industry you are in or what type of AI or technology you have placed in the system, you can never eliminate fraud from anywhere. There'll always be a certain percentage of risk which everybody has to take. So that's how, what I see, that we will have better controls placed in with new technological AI inventions in the banking industry also.
If I could just add to this. So we know that AI has already got into the banking industry. And to a great extent, it has definitely added value to making certain types of decisions. But let's not forget, it was all about an emotional understanding, a connection with the client as well. The ability for the banker to understand whether this will be validated, whether this can happen or not. The old days were all about body language, right? And that emotional factor is missing today within certain other aspects. So it's not going to go away, you're right. It's a start, it's a good start, but a human involvement is necessary at that point, because whether it's real or not comes in, and maybe the numbers, the algorithms can't really figure that emotion out, and therefore I think this will be coexistent, as far as the AI is concerned, and as far as a human being is involved, that aspect is always going to be there. Now, when you talk about the bigger loans, right? You talk about loans, with a bigger amount involved. There's going to be more focus towards the actual logic, right? As opposed to a quick getting an answer.
Well, when you say actual logic, you're referring more to the relationship.
No, not just the relationship. It depends on the business industry. It depends on what has happened in the industry. It depends on what is going to happen to the industry as well. And some of those aspects may not be able to be retrieved through a machine. You really need to go back and look at some other areas, the IBIS worlds that we talked about this morning.
And then just as a follow-on to that, just realize that even with the best AI, it's the human factor plays into this. All you have to do is think about FTC, and the issues related there, and you realize a lot of people made investments. And they spent, they supposedly did due diligence, but if you would have really taken a look at the underlying factors going on with FTC, they would have never made that decision to invest. And so AI will only take you so far.
Very good. I'm going to repeat a comment from an earlier session today, that it is possible that AI causes our personal interaction to change, or our role or our job. I mean, we're not sitting down with a paper and pen filling out applications as much as we are actually getting to know the client, their industry, their need, because now we have the time to do that. We've been liberated by AI to a certain extent on the data gathering side of things, as well as connecting some of the dots. Literally today, I can enter in my information somewhere in certain databases, and they'll pull up what vehicle I owned 25 years ago, and they know whether or not I made my payments, right? That's helpful. That information is useful. But then to your point, especially in much bigger loans for much bigger businesses, et cetera, you need to understand industry trends, you need to understand global economies, you need to understand the likelihood of the individual and their potential success with the money that you're going to give. And that comes back to something that maybe the AI is not trained for yet.
And yes, and to add to that, it also goes on to the ground level of how do you make money, right? It's your sales element to go out and bring in those customers, but it's also how do you really do what you do in your business on a very granular level, so that the underwriter can actually see it and visualize it. And that's what's missing sometimes. That's where underwriting takes a lot more time, because the underwriters come back and tell you, we don't get it, or it's not enough. Mm-hmm. And what do you want to make it enough is the big question. So
very good.
Just to add to your point, as you said that AI helps, yes, AI has taken a lot of jobs from us. What it has helped us to make decisions effectively and efficiently. That's what AI has helped the banking and the credit industry.
Well, very good. Well, I think we are here for some last comments, and then we're going to wrap up. So we'll go in reverse order. Tom, if you'll go ahead and start. And, coming back to the point of underwriting, credit risk, fraud, maybe provide your last recommendation or bit of knowledge that you'd like to share with the audience.
One of the things I always tell people is know your industry. When I say know your industry, again, I've probably been in 500 different companies in Silicon Valley, and usually not for a good reason. And a big problem there was a lot of the companies, they didn't really understand their company. The CEO, executives do, but as soon as you get past that, they don't. Know your company and know how you make money. And that's because that's what the criminals do. They want to see what it is. And then using AI to help counter that is key to the future.
Thank you.
AI is here to stay. You will like it or not. You will have to get used to it, understand how to make better use of it. And it is not over here to take our jobs or anything like that. I would term it is like a nuclear fission, where it, from one type of an atom, it will create multiple different industries, more creativity will take place, and more jobs will take place.
And I would go back to credit and underwriting. And to end off, basically, look, banks are looking for data. Banks are looking for data that can be validated. So the more you as a small business are able to present yourself clearly to the lender, the smaller aspects of how you're going to make money and who your, what your model is and who your customers are you in the right market, the more detail you give to the bank, underwriting gets much easier, and therefore the right decision can be taken as far as getting the approval as well.
Well, very good. Well, thank you very much. Little tidbits, golden nuggets that I pulled from the last bit of advice is know your industry. The criminals are going to know it better if you don't. AI is here to stay, so get used to it. Learn how to use it. As well as for credit and underwriting, the clearer picture you can paint so that you can get that business loan, so that you can get the financing that you need, the easier and quicker underwriting will be for you. So don't hide data. Provide the right data, because their AI is going to find it regardless, right? We've had a great panel discussion today with some great individuals from industry. I'd like everyone here to give them a hand of applause.
Thank you. Thank you, everyone.
Thank you.
And if you have more questions for them, they'll be here after, so feel free to reach out to them directly.